your host Aishwarya, and welcome back to episode 2 of Scale Talks. In today's conversation, we are discussing assets like gold, silver, and real estate. So let's get started. So we have with us Mr. Sailesh Khandelwal. Thank you so much for joining us, sir. Today, we want to discuss about one of my areas of interest, which happens to be real estate. So, if one needs to invest in real estate in today's time, what do you think are the smartest options or approaches one needs to consider? Also, if one wants to buy a property on loan and does not have the right funds, what do you think must be his route to achieve that?
Quite interesting question, and you have clubbed most of the lengthy question in the one shot. So it will be very easy for me to answer. First, see, most of the in my last session, I told you that real estate market has very low kind of an yield. So if you say low, it's between 5% to 7% in terms of investing. See, there is a two way of an approach. Either you're investing in real estate market for the sake of end customer, that's a different story, because it's for your sake, for
Correct.
your requirement.
Yes.
And then comes an investment part, which is your passive income, which you're looking at. So if you're looking at a passive income, then what you can do is there is a crux which you can play around in the real estate market.
Okay.
One is a stress assets model.
Okay.
If you look at most of the areas today have incremental price on the real estate market approaches. So if you look at, if you get into the auction-based properties, okay, which is already available in banks, multiple banks, in the nearest bank which you have, you can try with them and you get most of the discounted property at a better cost at a better location place, because location also matters. So today, in most of the highly influential area, you have a high cost of a real estate market,
Very
which
true.
one cannot afford.
Yes.
The same price you will get it at 60% or 50% discount when you get into the bank auction pricing. That's
Okay.
way one of an approach,
Okay.
where the low savings approach or low income approach, people can also go to the bank and get a loan against that property.
Oh,
That's the one
okay.
approach. And
Very
the
interesting.
second way of approach is you wanted to have a quantum of an investment, say 1C or 2C kind of an investments. Then what you can do is find out where are the solar or wind mills are being installed, newly installed. So normally
Okay.
what happens is once these kind of a project comes to that location, the nearby projects normally gets spiked up. So
Okay.
when you find out where it is, and every government site has this information, state-wise, district-wise, where are this installation is happening, new installation. Try to buy out some property. So one C, you buy it in a prime location. It's a very say, 1,000 square feet, 1,500 square feet. Same for one C, you can buy it at least 1 acre or 2 acre kind of a square feet of an approach.
Okay.
So if you look at the square feet, it's going to be about 40,000, 50,000 square feet at 1C kind of one. And the spike of returns will be 3 times higher than what you invest in the local markets.
Whoa.
Okay, so
Okay.
that's one approach which you can look at. So
Okay.
most of the approach which the common people can look at is one is the stress assets based approach. One with the new project coming up, please try to invest your investment to that large size of a quantum of scale a square feet. Don't try to invest into the smaller size of a properties like 1,000 square feet, 1,500. Investment, that's what I told you, investment is different, savings is different.
Okay.
End customers investing in real estate is different. So
Okay.
end customers say, assuming I'm an end customer, I want a home, so I will go whatever the price I'll buy. I'll not look at the price.
Correct.
But I have already bought a house. Now I need to invest my funds. So I will get into either stress assets based property, which gets me a discounted price, or I'll go to the nearest upcoming projects where it has been installed. So I'll go there and try to buy those properties. That's the best way of an approach.
Wonderful, sir. Thank you so much for that. I think our viewers might have gotten a lot of information from whatever you have conveyed. So that's a good piece of advice, sir. Sir, so now that we've spoken all about stress assets, I wanted to quickly understand what gold ETF means. Is it the smartest way to own gold in 2025?
Okay, gold ETF is, as I informed you last time, real estate market. If you are an end customer, you want to invest for your own sake, then gold is a better choice on a physical approach. For your daughter's marriage, son marriage, then you can start investing on a physical side. But when it comes to an investment avenue, then the gold ETF is better than the physical gold.
Okay.
Reason behind, it has a fastest way of liquidity approach.
Okay.
Assuming you required funds on a faster, quick way for some
Emergency.
emergency sake, you can immediately liquidate. But when
Correct.
it comes to physical gold, it becomes tough for you
Yeah.
sometimes, right? The market fluctuates. If you look at a long-term perspective, gold has given a better returns, say about more than 8-10% kind of returns. But in a shorter runs, it has a high volatility.
Okay.
So in that case, the tax, even if you buy physical gold, you end up paying a lot of wastages, charges, GST,
True.
etc.
True.
But when you get into the module called an gold ETF, those charges are lower. That's only a
Okay.
transaction fee, but not kind of a physical model. So you
Okay.
save in charges as well. The liquidity option is better than the physical gold. So always approachable is, even today more of the institutional investors are betting on the gold ETF rather than going into physical gold.
Okay.
Most of the companies or governance of approaches, more physical approach is normally taken by the governments. So now for the economic hedge portfolios model.
Okay.
Okay, so now most of the institutional investors started approaching towards a gold ETF,
Okay.
which is a better investment approach for them on the return side as well as liquidity side
Liquidity,
as well.
yes. Yeah. So before we move on to the next question, sir, if gold is a safe option but barely grows and crypto is risky but fast, what should the average person really bet on?
See, that's what I told you in the beginning, that most of the time we get into higher returns based on asset classes. Assuming if say crypto is giving you higher returns, people run behind the higher asset classes. If gold is giving you on higher returns, people start shifting their funds from crypto to gold.
Of course.
If FD start giving you more better returns, people will start withdrawing from there and start investing it.
Correct.
See, always have a diversified approaches. So any asset classes you take involves a risky model. So any asset class will always hold a risk. So how are you going to manage the risk in over a long term period is
Okay.
most important.
Okay.
So if you look at blockchain based Bitcoin or Ethereum, when you start investing in it, yes, on a longer approach it is safe. But if you look at on a shorter avenue or a trading model, it's a high risk model.
Okay.
Because if you compare the crypto versus the equity or any other financial market, most of the regulated investment approaches has a ceiling limits.
Okay.
But when you get into the blockchain based approach, they don't have a ceiling limits per day because it runs 24 hours market.
Okay.
So where the high risk is involved. So you cannot track. So
Correct.
you should have a better financial advisor to take things forward, and always have a different asset classes in your portfolio to make things happen for you on a long term building.
Got it, sir.
Yeah.
That makes more sense now.
Yeah.
Yes. Tracking back to the question where we spoke about gold ETF, I wanted to understand more about gold ETFs. Like, what is the form in which we can acquire it, or how does it work, sir?
Okay, so to be precise, assuming you bought a physical gold, right? So where do you hold it?
In the locker, in
Locker.
yeah, yeah.
So you need a space for it,
Of course.
right? And you need to protect that. Correct. You need to
Yes.
protect every time.
Yes.
So you cannot go home locking your locker.
Correct,
You will always have a
yes.
fear going out.
Yes.
Now, when it comes to the gold ETF, same amount of the investment what you made for physical, you will find the same kind of a returns or the growth or the investment approach in gold ETF, but that will be in the bond,
Oh, just bond paper.
just bond paper,
Okay.
right? And that is tradable.
Okay. Oh, okay.
That is tradable. So
Okay.
assuming today you have an emergency funds, what you do if you have a physical gold, you need to look for a buyer.
Correct. Yes.
Okay, so if you, sometimes you may find a buyer.
Immediate buyers are very rare to
Now,
find.
it's
Yes.
so emergency. What
Yeah.
you do for physical gold,
Yeah.
you need to sell it at loss.
Correct.
So you might need to sell at lower price because you require an emergency.
Emergency,
for
yes.
that. But when it comes to a gold ETF bonds, it normally trade at a gold price. There is a
Okay.
buyer available.
So selling becomes
Selling
easy.
becomes easy. Okay, so
Okay.
it all becomes on what time you want and what time you need to exit it.
And all this comes as a part of being on the bond paper. Oh, okay.
So that you hold in your demat account, that is
Okay.
already protected by the regulatory authority.
Okay.
So it becomes safe for you rather than getting a physical gold model.
Okay. Wonderful. It's actually something new that I learned today. So now that we've spoken all about gold, I wanted to talk about silver. As we all know, mostly silver is used in almost everything, be it solar panels or EVs or the most basic of things. But why is it overlooked so much? Is it the dark horse of investing? What do you have to say about it, sir?
Okay, when it comes to an investment angles, okay, so you normally term gold as a precious metal.
Okay.
Why not silver as a precious
That's my
metal?
question, yes.
Yeah, so because silver is basically used in multiple industries, right? So gold is basically used for a hedge portfolio.
Okay.
Most of the country use gold as a hedge portfolio,
Okay.
and silver is normally used for industrial purpose.
Okay. Sorry to
Okay,
cut you, but what is hedge portfolio, sir?
hedge is somewhere when the economy slashes or sluggish or it under a deflation mode, the every country holds a reserve part of gold
Okay.
to protect their inflation model.
Oh, okay.
Okay, so it's called a currency hedge model.
Okay.
So whereas it has not been used for silver, it is mostly
Okay.
used for gold.
Okay.
That's why the gold is normally termed as a precious metal.
Okay.
Okay, that's had a different value, and it is sentiment as well. If somebody say gold has a different value.
Everyone gets
Silver has a
excited.
different
Yes,
value.
exactly.
Silver is already why silver is normally follow gold, because silver is normally used in every industries today. Okay,
Correct.
so the value of this never come down because industry is always using. Now, if you let we listen to a lot of newses that in future, maybe 5 years, 10 years down the line, blockchain based cryptocurrencies might take over the hedge portfolio rather than gold. We don't know how far it is going to be true, but we never hear about a silver is going to replace as a hedge portfolio for the
Very true.
economy.
Yes,
So
yes.
we see there's a different angle how the human look at. It's mostly on a mindset how you look at, but both are an investment angle you can look at, or at a physical asset model you can look at. So even the
Okay.
same model for the diamond as well.
Okay.
If you look at the returns kind of stuff, gold would have delivered say about 8 to 10, 12% over the period of time. If you look at silver, it's same following that's a gold. But if you look at the diamonds, people feel diamond is more expensive,
True,
but
yeah.
diamond have never given any returns.
That's
So the
true. That's very
last
true.
if you look at this is zero returns kind of stuff which happened. So why then even the diamond has been given as a precious kind of a approach? It's
Yeah,
a
why
mindset.
so? Why so
It's a
actually?
mindset. That's it.
Okay.
If you look at diamond is an expensive than gold sometimes. Yeah, there is a white gold, there is an yellow gold. So normally we say only gold
Is
is a
it
precious
also
metal.
because of the process of extraction, do you think?
Maybe,
Yeah,
but
yeah.
we see normally the people are attracted towards gold rather than diamonds. Diamonds is normally for the females jewelry,
Yeah.
so it looks fancy on them. But asset classes, if you look at most of the business class or retail investors, investment angle, they only approach for a gold and silver.
That's true.
Right?
Yeah.
So that's the way of looking at.
That quite explains my question actually, yeah. So now we're coming to the most trending topic, which is also buzzing currently, which is cryptocurrency. I want to understand all about it. So can you please explain to me as to how one needs to go about it and how one needs to approach that?
This is an upcoming new financial market, I would say rather. So, in the current traditional financial market, what we have is the timeline. That is
Correct.
the duration of the stock market. If you look at Indian stock market, it works between 9:15 to 3:30 p.m. But if you look at the cryptocurrency market, normally works 24 hours.
Correct,
Okay,
yes.
one. So the tracking becomes difficult in the cryptocurrency market,
Okay.
and it is highly volatile.
Okay.
Now, for example, in India,
Uh-huh.
since we are addressing most of the Indian crowds or the international people also, if some watching, if you look at US or UK, any equity market, they work on a centralized exchange.
Correct,
When
yes.
when it comes under centralized exchange, there is a freezing limit.
Yes.
Assuming the stock price comes down to the 5%,
Correct.
the stock price halts for half an hour, 2 hours, and
Yes,
so on.
yes.
But when it comes to a cryptocurrency market, it works on an unregulated approach,
Okay.
which means there is no freezing limit.
Okay.
It may go down 40%, 50%, and same time
Or
it may
shoot up.
also shoot up to 50, 60% on
Okay.
that. So it works on a high volatility market. This works on a low volatility market.
Okay.
The basic regulated one.
Okay.
So most of the people get into the cryptocurrency today. India is the second largest in the crypto investment. Reason behind is it's a blockchain technology, Web3 model. So most of the youngsters, if you look at the age between the statistics which came recently, the age between 21 to 30 is the highest investors in terms of cryptocurrencies today.
Yes, yes.
Because they understand this technology better
Yes.
and they are heading towards that. Now, uh, will this cryptocurrency stop because it is not regulated? How do I invest? Then it question comes, the strikes into your mind whether I should invest, I should not invest.
Yes.
Now it's all about your risk appetite. Whether if you are ready to take risk, because it comes with a high risk, high returns, right? So if you allot your 100 out of 100 rupees, you wish to invest 10 rupees into the cryptocurrency market, yes, it's part of your risky asset class, provided if it is a long-term view, you might get a better returns. But if you're looking at trading approaches, then you need a smart way of learning how this market works. Then you enter this market. Now, blockchain-based digital currencies are also being formed by these every central governments. Even India is coming with their own CBDT currency,
Okay.
which is under its way because it's
Okay.
already under the pilot.
Okay.
So it may launch anytime soon.
Okay.
There is R5 currency which is coming from by the BRICS, which will be done by India and other 5 countries. Is going to join together, launching a new currency called R5, which is underway. Right, US is already into a regulatory approach, so they already have a USDT stable currency. So there is an approach on stable model. There is also approach on volatile model. Now, if you look at Bitcoin, Ethereum, this all come on a volatility approach, which means it may go 40% or 50% up or down. When it comes to stable currencies, there are also cryptocurrencies in the stable market, which has a very limited upside and downside. So it works like an USD kind of a
So
approach.
where can these currencies be used? Like, how do we translate this into, like, using the.
So every country is now trying to adapt. So if you look at US, UK, they started, few of the shops started approaching accepting the cryptocurrency as a payment.
Oh,
So
okay.
most of the, even in India, few of the people who is ready to accept cryptocurrency, they have started doing it.
Okay.
But it is still, it cannot be termed as a cryptocurrency because
Okay.
government is still
It's
not
not
regulated.
validated yet.
So unless it gets validated, when the government comes with the regulation,
Officially
probably in
approved.
Indian people can start working towards it. But if you look at emerging countries, they started, more than 30 plus countries started accepting. So
Wow.
you can make you can book flight tickets, you can book hotels,
Oh,
okay, you can
okay.
spend on your travels, vagara. So this
Okay.
already been started here.
Okay.
So but in India, still we are waiting for a regulatory approach. Once the regulatory comes in, probably people will start getting into that. So
What is the process of dealing with this digital currency? Sir, now that I mean, I am aware that if I want to buy stocks, I need to have a demat account and,
yes,
like
yes,
follow the whole traditional approach of how one needs to invest in stocks.
yeah.
But when one needs to deal with the digital currency, what is the approach that is
So
followed?
now in India, we have the unit called FIU from
Okay.
the government, Indian
Okay.
government. They have a registered exchanges, crypto exchanges,
Okay.
which is live in India.
Okay.
Also in overseas, we have a multiple exchanges, same like a stock exchange. We
Correct.
have a multiple exchanges for trading in crypto market. Wherever you want, you can build your asset there. So it comes with a complete Web3 blockchain approach. You
Okay.
have a centralized approach, you have a decentralized approach.
Okay.
So centralized, which comes under a governance,
Okay.
like in India, 30 exchanges which are available, which come under the governance.
Okay.
Okay, it has to follow certain norms.
Okay.
Okay, so they come under a centralized model. When it comes to a decentralized model, there is no custodian involved, so your money, your asset is with you. So
Okay.
you can do anything which you wanted. So that's
Okay.
where the cross-border transactions are happening.
Okay.
So that's where government is looking keen.
Okay.
How do we track this system? How do we make this policy approaches? How do we regulate this? Under which we should bring this? So people are eagerly waiting for the policy makers to come up with their own results. So we'll see what happens next in the government, Indian
I think the
government on that.
masses also need to be equally educated about the whole process because
Yes, I think
everyone is.
more of youngsters started up complete awareness is coming into the college students.
Yeah.
But I see most of the youngsters who have just joined at jobs, they started understanding what it is. So most of the funds today floating in the 30-40% of the ratios goes to the crypto market, and the rest of the traditional models like gold, real estate is what the youngsters are not looking at as of now. But most of the age category 40 plus are looking at to get into the real estate, gold, and this
Gold,
thing.
yeah,
But
safe
the
options.
youngsters are getting into a blockchain technology
Yeah.
because they understand the technology and getting into this model.
So I also noticed that you mentioned a lot about Web3.
Yes.
So what exactly is Web3? And I wanted to understand
It is
more on that.
basically a technology. So we shifted from Web 1 to Web 2
Okay.
to now Web 2 to Web 3. So
Okay.
Web 1 is something which you can read.
Okay.
Okay, you cannot communicate. Web 2 is something you can communicate, you can
Okay.
read, just like a Facebook,
Okay.
Instagram, it's all
Okay.
on a Web 2 platform. When you go to Web 3, you have a complete infrastructure and ecosystem
Okay.
where it is completely protected.
Okay.
So your transactions are being protected in such a way where the threat or hacking cannot happen.
Oh,
Today
okay.
in your banking account, your internet bank's account, normally, police department used to give you an awareness that please be aware that don't share your OTP, etc.
Yes,
So on.
yes,
The
yes.
same because it's a Web 2 kind of a platform. If it
Okay.
is done on a Web 3 kind of a platform,
Okay.
the threat can be
So
reduced.
the
Even today,
environment is primarily for
primarily
these
on a
financial
technology. Yeah,
transactions.
so
Okay.
even the banking started adapting Web 3 technology.
Oh,
Okay, so
okay.
most of the blockchain based technology,
Okay.
most of the Indian banks, insurance companies, healthcare, they started adapting this technology to
Okay.
protection of the people's fund and the transactions.
True.
Okay, so
Okay.
blockchain is developing,
Okay.
and the Web3 part is also developing along with it. So there's a new era which is coming in the next banking model is going to be of a digital era. So people are looking at to grow, getting into the growth of that.
That's so much information for
Yeah.
me to process. I mean, that was really nice of you to share that, sir.
Pleasure.
Hey everyone! Now that we've spoken enough about financial gyan, let's get some financial myths busting, shall we? Do rich people have any secret formula?
There is no secret formula. It's basically a consistency.
Does owning a house make you financially secure?
Provided it is loan free. If there is an unpaid loan, then it is not your asset.
Do you need luck to win in the stock market?
It's all about patience and discipline.
If you're not in crypto, are you missing out?
If you don't understand the market, better to miss it out.
Can money really not buy happiness?
It's by choice. Money can buy choice. This is my suggestion. Okay, it can buy choices. It can buy time, but it's equals to happiness as well.
Is cash still king?
In digital world, cash is just paper.
Paper?
Yes,
Should you always follow financial gurus?
provided he is knowledgeable and helps you to build proper financial goal and the proper financial portfolio.
And we're back again with a new segment, Hot Seat. Sir, I have a couple of questions lined up for you. I need you to answer them with agree or disagree. Can we start?
Please go ahead.
Owning a house is overrated.
Disagree.
Stock trading apps make investing too easy to be safe.
Disagree.
Cash will be useless in the next 10 years.
Agree.
AI will handle money better than humans by 2030.
Disagree.
Crypto is gambling, not investing.
Disagree.
Gold is outdated as an investment.
Agree.
The next financial crisis will come from digital assets, not banks.
Agree.
Schools have failed to teach us money skills.
Agree.
The rich are getting richer because the system is built for them.
Agree.
In the future, people will trust code more than banks.
Agree.
And that brings us to the end of the segment, Hot Seat.